and good afternoon. This is Dan with your weekly review and outlook, episode number 8, brought to you by the Derivative Technical Analysis Program here at Van Onen Company. Coming to you again with the recording on this September 16th, shortly before 2 o'clock. We are on a Thursday. I'm going to talk about a few markets here today as we kind of run down our quick sheet of analysis, looking from both more of a contextual view, broadly speaking, and then also from more of a smaller time frame view when we get down to the daily perspective on some of these. But just to get first thing to kind of get out of the way here, just want to remind everyone, past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors, and this is a solicitation. So what we have for you here on episode number 8 here, just coming in as usual, the economic calendar. We'll kind of discuss some highlights of what we have coming ahead for us into next week with that economic calendar. A couple FOMC events coming into next week that we'll want to kind of pay attention to, or at least the financial markets could certainly have more of a catalyst coming in. We'll head through our quick sheet and kind of discuss. We have a little update there for you on that quick sheet. And then want to discuss the Dow Jones Industrial Average. We'll talk about Chicago wheat. We'll also hit hogs and then head into heating oil and then finish up with the gold market. And again, we'll try to hit the weekly charts from a broad perspective on these, as well as a daily perspective from a more smaller time frame point of view there. So first things first here, I'll just get my economic calendar up. We'll switch over to that screen here. So coming in for really tomorrow, as we kind of alluded to last week, we really don't have a whole lot for the 17th of September on the economic calendar front. We have a consumer sentiment for the U.S. here at 9 o'clock Central Time, and then Baker Hughes rig count at that noon time frame. So very, very quiet session in terms of the economic reports for tomorrow. I do believe we have options expiration, however, coming in tomorrow, so that is something to kind of pay attention to here as options will kind of roll out and expire here, as well as really the September contracts on some of the financial indices are also last trade date into tomorrow, and so the roll has already taken shape here into that December contract, so we kind of move out to that next contract here again into that December. Coming in next week, we do have crop progress report on Monday there at 3 o'clock as usual. Bank of Japan announcement at that 7 o'clock time frame, again Central Standard Time, right as futures open back up at that 7 o'clock time spot. For Tuesday, again, as mentioned, we do have that FOMC meeting that starts there on Tuesday morning at that 7 o'clock time slot. That'll go into Wednesday. So again, into their announcement at 2 o'clock Eastern Time, 1 o'clock our time, Central here. We also have the press conference. The Fed chair will be on for the press conference there after that announcement. So next week, a very big week for these markets in terms of just potential outside catalyst type events that could create some movement. Cold storage for us also on Wednesday at that 2 o'clock time slot. Thursday and Friday also show jobless claims here and export sales on that Thursday morning. And then coming into Friday, we have new home sales. We also have some Federal Reserve bank speech here that the market will, I assume, kind of be, keying in on. They usually like to kind of key in on these Federal Reserve presidents and whatnot to see if they're going to give any clues to, inflation numbers or what their opinions are on interest rates, etc. So any clues there. Also, we have that Jerome Powell speech again here on that Friday, and then wrapping up Friday, U.S. hogs and pigs at that 2 o'clock Central Standard Time to wrap up that Friday session, as well as cattle on feed at that 2 o'clock as well. So a lot coming at us here next week, just across the week here as we come into the back half of September and really the end of the kind of the back half of, or the end, I should say, of the third quarter, and kind of start to think about Q4 here, 2021. Next item up for business here is the quick sheet here for us. So with the quick sheet here, the one kind of update that we wanted to let you guys know on in this posture ideas section, you guys have been familiar with the long short versus the certain level. If you have any questions on that, do feel free to let us know. But what we added here coming in earlier this week is we started to update dates here, and I just want to change my, there we go. We have started to update the dates here that you can see circling here. So when that date is updated is when we change our long short posture. So as you can see with the Aussie dollar on September 14th, that's when we changed to this number on the posture ideas. We don't have all of these currently updated, so that means we have not changed them recently, and as soon as we do change them again, we will have a date that shows up in this side of the column, on the right side of the column. So again, natural gas, we changed that here on the 13th, so that will show that updated date along with the updated price, and so you'll get a better idea of just what day we're starting to kind of move those pivots on. It'll help you kind of not lose track of when we're trying to go long or when we're trying to go short, or at least from a posture standpoint, what days are we really looking to make the turn or switch those. We'll also try to highlight this column or this section upon changing that. So any type of change will have a highlight in the contract description and contract area. So again, if we do change the date of the posture idea, you'll see a highlight over on the left hand side in the description area that will catch your attention. Again, if you have questions on this, do feel free to let us know. I'd be more than happy to walk you through that here. The one spread we do have on and the one recommended execution we still have on here, as we've lifted a few things off this week, one being the Russell 2000 trade, the other being the corn trade here, but we do still have the bull spread here in live cattle, the long February, short the June. We're continuing to let that work out here and kind of see what transpires. Certainly a slower delta type position, we knew that coming in, and so a little bit more patience is involved there. But if we can get that thing closer to $3 plus, you very well could see us taking that and taking the winner there. So we'll see how that transpires coming into the next few weeks. But just wanted to let you know in terms of that is the only thing we have in the recommended execution column as of this time. Getting into the charts here now, I'm going to talk about the Dow Jones Industrial Average first here in the financial side of things. Again, looking at the weekly chart here, we'll try to start with that weekly perspective and then move on from there. With the weekly perspective here, going back 3 to 4 years here, really, we do see an attempt at higher highs here from a weekly perspective. I think the biggest thing I want to point out here is simply, the kind of the issues we saw earlier in the later spring months, in the early summer, where we started to see this hiccup back to the 21-week EMA in yellow here. And then ever since then, it's kind of been just a slow grind higher here. Since that day, since that week here, and I'll get the week for you here, June 21st week, it's really just been a slow grind to the top side here in this market, and we've made new highs, we've made new closing highs. However, if you look at your RSI here down below, we are seeing lower highs transfer in that measure here on the 21 period RSI situation here. So something to kind of monitor here. It's more of an awareness factor. It kind of tells us and it shows us that the aggressiveness to the top side is starting to slow and starting to wane. So be a little bit more attentive to that if you are trying to be long, to keep those stops pretty tight. And also we're at more risk then from that perspective of more quicker sell-offs and just kind of washout type events that that could give us a nice corrective phase where we go test the bottom end of this range that we've now developed. I think that's another good point here from this weekly perspective is we're starting to build out a nice volume pocket here, which could be more of a consolidation type of situation when it's all said and done. However, right now we are basically right in the middle of this, right on this high volume node here. So it's really anybody's guess here in this range for the time being. We're right in the middle of it. But again, that divergence does give us some pause here for just expectations of upside behavior is really the best way we can put it. To the downside, we do think, if we do challenge some downside, this is obviously that first level that we believe we could go test. Again, that June 21st low area gets you around that 33,000 to 32,900. Okay, so that's another 1,600 to 1,700 points from current price here. And then from there, if we really want to go further, the profile gets pretty thin until it starts to build out, below 29,000, below 28,000. But you have some high volume node pockets in here. I would rely on this 63-day EMA in purple as well, and we'll get some better levels here as we go to the daily chart. But just more or less the overall contextual view from a weekly perspective. Coming into the daily here now. With the daily chart here, we are seeing, again, just that struggle to really get anything moving to the top side. About a week or so ago, we faded this thing back in, centered around the VPOC. This VPOC currently sits around 34,500, and that's really where we've been centered here the last 4 or 5 days. If you look where the lows have come in here over these past few days, it's been right around that VPOC. They're building out this volume pocket, which as long as we're above that is a very good support measure in that short-term perspective for rotations to try and go see if we can challenge these highs again and this higher volume node that built out around that 35,370 area. That's a possibility there. The other perspective here is that this doesn't hold and we head down and go test this lower end of the range. You have a high volume node here at this 33,850 zone. So that gets us, almost halfway to the lower end of this 33,000 zone. Again, if you recall from the weekly chart here, these are the lows that we were referring to on the weekly perspective that really started that pivot where we could expand off of this. They create a sense of, if we do see more downside perspective or downside moves here, this level here at 33,000 to the downside is really that kind of that magnet where we would see a first stop to this downside move. Doesn't mean we have to stop there and then we go higher from there. It just is more or less, this is kind of our playground in the immediate term and the short term that we want to be looking at. And as you'd guess, the volume profile, certainly speaks to that as well here. As that volume is built out, you have the 200-day EMA here that currently sits right around that 32,933. So again, you have some confluence of indicators, confluence of price behavior, of volume profile coming in right around that 33 to 32.9 level. So that should be something we kind of pay attention to here if we do indeed break from this consolidation and start heading lower. Next chart we'll run through here is that Chicago wheat market. Let's see here. Chicago wheat off the December contract. I'll get the weekly chart up for us here first. And we'll go to really I actually want to hide, we'll leave that up for the time being, but again, weekly perspective, long term here that we're looking at. You have more of almost like a double top situation coming in on that Chicago wheat, and I don't know necessarily if I want to look at it quite as like the end all be all of what double tops get referenced for. However, it does give decent confirmation of there is reason for some shut off up here that we need to be aware of. So if we're screaming to the top side and we take that out, some other information, something's going on where we have a chance to go challenge this upside consolidation in this higher volume node up around 865. But until we really take that out, from a weekly contextual perspective, you're really stuck in this range from this 878. Call it 878 to 870, 675 level that we're looking at here to that 768 zone at the highs. If you can kind of play within that range, again, once we get to the daily perspective, it'll make a little bit more sense here. But that's really our playground right now from a weekly perspective. You have this shut off to the top side that occurs right around that it's called 760 to 775 zone, and then you have support kind of trying to show up around this 675 to 680 zone here, which we've now confirmed for 2 weeks in a row. So be prepared for more back and forth, in my opinion, here in this market in the immediate term. And as we go to the daily charts, let's see here. And here's where the daily charts give us a little bit more smaller time frame, possible trades coming in. So you can see this retracement zones that we're marking out Fibonacci wise. This is from the close up here to the close down here. What this gives us is a 38.2% retracement of 721. You have a high volume node here between the 61.8 and the 50% retracement zone. That's a very attractive level from a high volume node perspective. But also notice just the fact of coming into these EMAs here today, you're starting to see some sellers show up here off of this 200-day EMA bounce. So again, don't be surprised to see some back and forth nature coming in here in this market. But the big contextual viewpoint is you have this shut off up top here, and you have this support down here, and now we have this zone to kind of play with in our contextual view. Again, from probably more of a days to weeks perspective, and even maybe you're talking a couple months, that could possibly be a situation as well, but more in that weekly time frame that we're looking at there. This high volume node also kind of marks, just as you would guess, the center of this range. So as you get closer into that, it's just going to be a lot harder for buyers to continue that bid here. You're gonna likely see sellers at least try up in here, just because of all the volume and all the push that we've seen throughout this downward move here. So something to kind of be aware of there. More or less, to really say from a trade perspective, if you can play the ranges here, that's probably your best bet. Otherwise, if you can try to play the edges from the ranges back to the middle, but if you're in the middle, it's pretty much a choppy mess, and you're kind of guessing to either side there on Chicago wheat. Next chart we'll run through is the December Hogs chart here. And I just want to talk about the daily perspective on these Hogs chart for the time being. VPOC currently sits in right around that 8150 zone, 8145. You have somewhat of a shut off here today that is definitely more of an outside candle from the last 2 days. So that is your shut off. You have a high volume node that has been built out. It was there a couple days ago. It's starting to build out more now as we traded the last 2 days in this area. So again, we're kind of looking at this from more of a counter trend type of perspective back towards this 200-day EMA as you get into these previous lows here. You also have some interaction with this reversal low as well. And wouldn't you know, there's a high volume node coming in right around $75.90 to $76 there. So that's our kind of our first stop where we look to see, can we get up to in this hog market. Above that, you're probably looking into the value area, into the bigger volume nodes here, into 77.35, 77.30. You also have a higher volume node even deeper as you get closer to the 21-day EMA around that 78.30 zone. So a couple upside counts, a couple upside levels that make sense on more of a counter trend trade, to that top side. Again, I think the biggest thing here is seeing that VPOC sitting up where 81.45 here. rotations back towards that value perspective should not be surprising to us from a technical perspective. You're seeing some good volume show up here that really we'd like to see on that shut off day for a day like today. So again, see if this has some legs and see if we can get up into these zones here. Conservative delta positions are more or less going to be like a sold put type of option, or you can try it out with a futures. If you do a futures, you're probably trying to risk, at least as of this point, the low of today's action. So the low of today is sitting around 71.27.5. So you're already talking $3 of risk at that point to see if you can get, let's at a conservative rate, another $2 to $2.50, let's call it. So a little bit skewed on the risk reward, at least to start at that point. So it might give you a little bit more caution to maybe go a little bit conservative delta on that position, or try to get your stop a little bit tighter, or get a little bit better entry if we get a dip here coming in tomorrow. We'll see what happens, but risk reward wise, conservative viewpoint, probably 1-to-1 at this point. If you're lucky and we can get some more extension, you're probably talking more into that 2-to-1 perspective there. So we'll just see how this plays out, and really that's all we can do is align ourselves with the best risk reward we can possible with the contextual viewpoints of the market, and kind of see what transpires there. Next chart, as I said, I wasn't going to run through the weeklies there just because I think it's more of a daily situation going on there in that hogs market. But that next chart we're going to run through here is heating oil, and we're actually going to use the October there. There we go. Try to get us out to a weekly chart there. And so weekly chart here coming in, broad view going back pre-2013. We've done this with a lot of the energy products, is just coming in and kind of seeing, hey, what's the long-term perspective here? We are banging up against these longer-term resistance spots that we've seen selling come to or come from in the past. Obviously, a lot of big selling coming in from previous years around this zone. However, there's some good action coming in. I would state though that there's something interesting going on in terms of, yes, we have the VPOC that we've bounced off here for the last 3-4 weeks now, but notice RSI. RSI is a momentum gauge for us. For this to continue much higher, that's fine if it wants to go attack these highs, which is basically 235, 240, let's call it. But much more than that, I start to get a little in the short term. If we really, hit that in that shorter time frame, and we don't resolve this momentum issue, it just, to me, it skews the risk reward for any longs. So I'd be more in the camp of waiting to see if it gets up here, and then more or less playing it back down into this range. And I believe there's going to be more of a range here in the short term because of this momentum structure that's coming in. Obviously, very strong market here that we're seeing in these energy markets. We're seeing good consolidations taking place, but just that overall weekly perspective from a momentum standpoint, you have some reason to just be a little bit more cautious up here, at least from this point in time. Now, coming into the daily perspective, you don't have really that. You have more of that breakout, which we would consider. You can see that on the weekly perspective. You can see it on the daily perspective. You did not get overdone here to the downside. A measure below 30 here we did not see, so that is healthy to see, in this uptrending market overall. So if you're short term in nature and you're buying this breakout, I would just say have that expectation of that 235 to 240 range up here, and not really let it get too far away from you in terms of risk. Again, you have this VPOC, this very prominent VPOC here as well at 213-ish. So anything higher up here in the very short term, I'm talking like the next couple of weeks, we would likely look to see that come back down and give this a test. just because this will likely act as more of a magnet. If we go trade this thing higher into 235 to 240, you're likely going to have pretty thin volume. If you can kind of imagine this with me, you build this up, you're going to likely have some pretty thin volume if you do this over the next few weeks. So it just favors more risk if you are long, and really the play here is to just more or less be patient for the trade back down. If you get a successful test now of this zone, now you can take it to the top side. It really all depends on what type of style of trader you want to be. And you can likely make money on both sides of that market. If you want to be the breakout guy and trade that thing with expectations of that 235 to 240 zone, be our guest. And if you want to wait for some shut off to migrate it back towards the VPOC here, in terms of price, excuse me, you could also, have good risk reward structures there as well. So a couple different, even a couple different trades there from a daily perspective where you can really start to break it down and be flexible with your patience there and with your execution. By looking at both from a weekly perspective and a daily perspective, you can kind of fit the bill from a different execution standpoint for many different outcomes and many different traders. And the last chart we'll run through is the gold market here. Gold giving a pretty decent washout day here as of this recording. Just want to get this open here. There we go. With gold, again, this is a weekly chart going back about 10 years. You're coming in with this, again, kind of the theme has been just this really consolidated messy mess in gold for the last year and a half, let's call it. The question now becomes, are we on our way back to test this lower end of the range? You have very good inflection points here now down below that we've put in here over the last year or so, 2 years even, around that 1700 to 1685 zone. And now if we do get that test, it's probably worthwhile to really look at it seriously and say, hey, can we get into that with decent risk reward and understand that we can rotate it back higher? The next question that we come to mind is the 200-day EMA is sitting here. Is it something where we wash out and go, down to 1605 in this 200-day? I think the only way that's possible, and I say this because we're gonna likely need to see the dollar really break higher for us to really test this 200-day EMA in this gold market, which is possible. I'm not saying it's not. I just think we're going to have to look at the dollar index and really start to judge that and see that dollar move and really break out of the range that it's been in here for us to see gold sitting down here at that 200-day EMA. If not here, we're probably just, again, sitting in this range that we've been sitting in, and we're back and forth chopping this thing, playing 1700 back towards the 1800 level. You have this high volume node from a weekly perspective at 1725-ish. So again, remember that number here as we go into the next chart from the daily perspective, but you'll notice 1725 has a lot of different confluence of past prices. You're going to see past prices here that center around 1725, and then you're going to see 1725 center around here as well, way back in 2012, 2011, 2013, even to, actually just 2012. Sorry there. So again, remember that 1725 level, and once we do have some 1730 lows here that are very important. So there's clearly, on the daily perspective and the weekly perspective, something that's very important coming in here, and you'll see the bigger volume node built out on the daily chart here around 1740. So if you want to call it 1720 to 1740, we've already bounced off the 1745 zone here today. So again, there's high volume node, there's participants that have bought this thing before that they're starting to kind of, if we get any deeper here, that's probably an area to start looking to say, hey, can we rotate this back towards the VPOC? VPOC currently sits at 1789 in this gold market. I think the other, another takeaway with this market, just from, again, broad perspective, and you can even see it on the daily chart here, is just look at, I mean, this is kind of just more of a mess overall. You're really just trying to play volume node to volume node for the most part. There really isn't much of a trend going on here. Yeah, you have some shorter term, 2 to maybe even 2.5 months of upwards trending markets going on there. You have some downtrending markets going on for about 2 to 3 months there. But again, depending on your time frame, if we're just looking at this time frame here, it's been a pretty choppy market here throughout this summer, and back and forth, and there's certainly some shut off that's going on here as we get to the higher end of this range. No, they don't really want to take this thing much higher than that 1840 zone, 1830. So keep that in your contextual viewpoint to say, hey, if you're trying to come in and buy it off these lows here, use that VPOC and then use this top end of the range as kind of your expectations from that perspective to say, this is what I'm looking to get out of this trade. And with that here, if you do have questions, feel free to give us a ring and let us know. With any of the contracts that we follow here on the Quicksheet, we're more than happy to walk you through kind of our thought process, what we're looking at, how we're looking at it, and why. We'd love to answer those questions for you, or at least attempt to answer those questions and try to get you to an executionable spot that makes sense for risk reward and just makes sense for the context, of what the market is giving us right now. With that here, come back to the disclaimer slide here. Again, I want to thank you for tuning in to this episode number 8 here of the weekly review and outlook. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors. This is a solicitation. Once again, thank you for paying attention to these charts and our analysis here. And again, if you have questions, do feel free to reach out to us here. Have a great afternoon. And if I don't talk to you, have a great weekend up ahead here. Thank you.